Hello, everybody. Welcome once again. Wow, what a week it has been. So, welcome to this week. What a week it has been. That's the way it's supposed to go. But hey, what's a stream if I don't completely botch the opening? Anyway, everybody, it is so great to see you guys here. Welcome for another Sunday afternoon as we move a little bit deeper into the fall. All right. Um, so yeah, those of you who are here live watching this, big, huge shout out, big welcome to you guys. And those of you who are watching it at home as well, because about 75% of my total viewership on these live streams happen after the stream is done. So huge shout out to you guys as well. All right. We got a lot of news here. Well, actually, it was a slow news week, but we still have 8 news stories nonetheless that we will, of course, be getting to this afternoon. Also, a quick little mention about Blossom. So Blossom is the social media, the social media app for investors, for Canadian investors particularly. So I am over there. There is a link down below if you want to check out Blossom. It is a beautiful place because you get, well, you're not talking to everybody and their dog. You're talking to investors. All of the big YouTubers, Canadian YouTubers are there. So definitely check out Blossom, follow that link, sign up. And if once you're over there, find me, hook up. I'll definitely give you a follow right back and we'll get that all going. Whew. All right. Let's just say hello to a couple people in the house. We have a JJ Pandy says, hey, Candace and everyone, made it to my first live stream. Holy banana bread. Wow, that's kind of awesome. All right. And we've got Lisa, who I sometimes call Mary. Welcome to the stream. And we also have Mr. Stan Gray in here saying happy Sunday. Awesome. Awesome. This is really great. It's good to see a few of you guys in there. We're going to jump to that first news story really, really fast because I just want to get the first one done and out of our system. So the first news story that we have today is all about those U.S. inflation results. So we had a few different inflation results that came out last week in the U.S. One of them was their PPI. So that's your Producer's Price Index. They came out a little bit high. So it came out a little hot. They were expecting a 0.3% on that. And it came out at 0.5% of an increase. And that's big. So that does show that there is a little bit of inflation being persistent, at least on the producer side. Now, on the regular customer side, the CPI came out as well. It was up 3.7% year over year. Now, that's the same as it was in August. So inflation seems to be holding steady, at least on the consumer front lines. So, of course, we do know that next Fed meeting on the next rate hike, that's coming out on November 1st. So we're not that far away. It's going to be right after Halloween, though I do have to ask, is it going to be a trick or a treat? Right now, I'm kind of leaning towards a trick. I'm thinking they might actually be looking at a rate hike on November 1st. So we'll have to see how that all turns out, of course. All right. And JJ says it's just JJ. Okay, JJ, I will just call you JJ. And we got another J in the house in the line of Jay Borg. Hello, Jay. And you guys will notice that Jay has color on his name, and that's because he is a channel member. So if you want to support the channel for the price of about a cup of coffee a month, down below, you can join up to the channel membership. You do get an exclusive live stream every single month. You also get other little tidbits coming out from me. And I'm also looking to find ways to enhance that even further. So that's just one of those things. Oh, you do get a colored name in here, which is kind of cool. So I always find that kind of fun, opposed to just being gray. I still try to get to every comment, though, to the best of my ability. But someday we're going to get big enough that I may not be able to get to everyone. In those cases, those channel membership folk or anybody using, of course, like a super chat, will be the ones who definitely 100% get addressed. But right now, we're still small enough that I can quite easily get to each and every one of you, which is fantastic. All right. Now, let's move on to our next news story. I like getting the news out of the way fast because then as more and more folks roll in, and by the way, hit that like button, because when you hit the like button, it means that YouTube's algorithm says, hey, let's throw this out to more people, get more people in. And that gives us more of an opportunity to get some good discussions going as we move along through the afternoon here. All right, so Microsoft finally wins. So we're talking about that Microsoft acquisition of Activision Blizzard. So it is now finally complete. So this is a process. It took about 2 years to come through, and it cost Microsoft $75 billion. If you guys remember, about 2 years ago, don't know if I said it on this show. I might have said it on one of the shows here. But I was definitely bought into some of the Activision stock at that point because I knew things were going to go up. I did sell before we got there because, I'd reached a point where I had a half decent profit and I was happy with that. But it is good to see that this is finally over. Now, what this is going to do for Microsoft is it's going to basically more than double the value of their gaming side. So that's huge. A lot of these games that are owned by Activision Blizzard are going to be able to be put onto, like, for example, the Xbox. And that's been something that that Microsoft has been sort of lagging behind and has been sort of looking for that knockout punch with some of their gaming services. Now, this was a long trip to get there. They had a lot of challenges, which included everyone from in the US, the FTC. Over in Europe, you had the European Commission and the UK Competition and Markets Authority, all trying to put a kibosh on this, but they've all failed. It's now official, although, even though it's official, the FTC has still appealed it. And that's a process that'll probably take a couple of years. Now, what does that mean, though? Can they unravel it? We don't know. It's kind of fun. So how would that even look? That's something I don't know either. So we're going to have to take a look at that when we get to that. All right. And Abalash is asking if I have any plans for 3K subs. We're starting to get there. I think we're at 26 something. I don't have plans for the 3K because as you start getting bigger, you start picking up subscribers faster. So it grows a little bit faster. My next big planned event will be at 5,000, but not to say, oh, that's so far away. I don't want to wait. I want something cool, fun. That's something where, for example, if you're a channel member, you can make me do something fun if you really want to, because I let the channel members vote on what I'm going to do on the channel member live stream. So, for example, if you were like, I want you to eat a plate of lemons for the channel membership live stream, I'll do it. I will eat a plate of lemons. Now, in all fairness, I actually am okay with eating lemons. I was just using that as an example because actually I was talking with somebody from the community just before the stream, and we were actually talking about lemons. So, of all funny things. All right, let's get over here. JJ says, what are your thoughts on New Horizons leveraged ETFs? So HEQL, EQCL, QQCL, and ENCL. And they started trading this week. So he's thinking of, or JJ, I don't know if it's a he, it could be a he, it could be a she, it could be a something else. I'm not sure. I'm thinking of adding them to my portfolio and eventually maybe switch my XEQT holdings. Here's the thing about that XEQT. XEQT, because where that's an all equity, it gives you exposure to a lot of extra markets that you're not going to get through these covered call ETFs. Now, I haven't really, and just to sort of address these New Horizons one, I haven't looked at them. I haven't actually looked at them, but I'm going to. So it's on my agenda. Actually, Tuesday's video, I took another look into the Yield Max ETFs again. So those are the ones down in the States that are paying some of those absolutely crazy dividends. Like, for example, the Tesla one has a yield of roughly, I think it's 51%. So we're talking really crazy stuff. Now, those are those synthetic covered call ETFs. So yeah, I'm going to be looking at those on Tuesday. But this is definitely something I do want to look at. I haven't really just had a chance to yet, JJ, but it is on my, I guess, like you say, it's on my horizon. That's kind of funny. But yeah, it is on my horizon. So we'll get those looked at. And when I look at them, you guys will get to see them through my eyes as well. So Yeah, that's going to be pretty darn fun. All right. Now, I want to get to the next story only because I am pretty pro oil when it comes to investing, and it's an oil story. So, good old Exxon Mobil down in the US. So, they're actually making a move to acquire Pioneer Natural Resources. This is going to cost them $59.9 billion. That's fine. I mean, it's not unusual for one oil company to buy another oil company. Now, here's what makes this interesting. This is actually a really good sign for overall for the Canadian oil industry. Well, for everyone's oil industry, it shows that Exxon is pretty much confident that the global market is going to maintain in a demand for oil for at least the next 10 to 15 years. I know a lot of people are thinking, okay, well, we're trying to move towards renewable. Oil eventually is going to be going out, but that's not going to happen overnight. So we have to keep that in mind. Now, here's an interesting thing. Within the next year alone, Canada's oil production is set to increase by 10%. So that's pretty massive. And you have to keep in mind that right now, currently, crude oil in Canada is about 15% of our export. It makes up about 10% of our GDP. So I think oil is going to be looking pretty darn good. So those of you who are more of a long-term investment, long-term investors, oil is something to keep your eyes on. It's something I don't think you can actually lose money on, which I think is fantastic. All right, now JJ is going back to these Horizon ETFs. So HEQL is a non-covered call 25% leverage version of HEQT, which is Horizon's versions of all equity portfolio. Okay, perfect. Directly competes with XEQT and VEQT. Now, I do hold some VEQT in my RRSP, so that's interesting. So the only thing I caution, and I always caution this when you start pulling leverage into some of the covered call ETFs, you can go up fast, but you can also go down fast. So you always want to keep that in mind. So that does add an extra level of risk. So not saying that you shouldn't do any of these. What I'm saying is pay attention to them, watch them. That's the way I do it. Now, myself personally, when I do use a leveraged ETF of any sort, I tend to use them for more short-term moves. So, for example, we'll use like HOD, for example. So HOD, that is the inverse of oil. So it does use a little bit of leverage on it. And I will use that when oil is clearly in a downfall. I may throw something into HOD. And as oil falls, HOD goes up, and then I will sell. Like, to me, I do that almost in the same day. I usually will not let something sit in a leveraged overnight, only because of that big move. Now, some people are perfectly fine with sitting it in overnight, but what you have to realize is that with a lot of these type of ETFs, when it does fall, if you don't get out, you're into a situation where you have to wait it out to get your capital back, or you have to take a big loss if you're moving out. Now, in this case, if you're just using them, and I don't know what I honestly don't have any idea right now what type of a yield these are producing when it comes to dividends. If you're just in it for the yield and you're not really caring about your capital so much, you're just basically, you want that passive income, then it may not be as big of a concern for you as it would be for me. Like, I'm a total return investor, so I want I want as much money as possible, not only just in my passive income side, but also in the value of the underlying asset as well. Let's see here. Let's see. EQCL is HQCL with covered calls. QQCL is a leveraged version of QQCC. And I do love QQCC. I will put that there right now. And ENCL is a leveraged version of ENCC. So yeah, QQCC, that's the one that tracks the NASDAQ. And ENCC, that's more of an energy one. They're both, I love both of those. So I'll tell you, if I had a leveraged version of QQCC at the beginning of this year when I saw what was happening with the AI boom, I would have definitely sat in and rode, because that was quite a trip. Even with the QQCC, I made a good amount of profit on that. So that's Not a bad thing at all. Holy banana bread. Gotta say, I like that idea of that one. Okay, let's move to our next news story. I always like it that when we get the news stories out of the way earlier, it gives us tons of time to just, shoot the breeze or whatever. I was going to say there's another S word that fits in there, but I don't like to swear on a live stream, so I'm not going to say it. But you guys know I'm thinking it. Uh, so, Canadian trees. So this is all about forestry. So if anybody was like, "You're not going to talk about Christmas already, are you?" No, no way. So Canada is basically setting a forestry example for the rest of the world. And what I mean by this is it's the way we approach forestry. So we harvest less than 0.5% of our total forests annually. And we have laws put in place that actually say that for every tree we cut down, we've got to regrow. We got to plant a tree. So we right now we're planting between 400 and 600 million seedlings every single year. Now, overall, we've retained about 90% of our original forest cover. Now, that's, and you're probably thinking, well, what happened to this one for one? Why don't we have 100%? But if you think about things like forest fires and stuff, things like that out of our control, there's not much we can do about stuff like that. So we do lose some forest, but we're doing really, really good with that. Now, Canada currently leads the world in third-party forest certification, and we are managing 37% of the world's certified forests, which is more than 2 times the area certified in any other country. So we're huge. We're a big example on the world stage when it comes to forestry. And I know when I ran into the story, I was like, oh, this is really kind of cool. So we'll keep that as is. All right, next up, we've got, I got to switch the thingy over to move my orange. And we finished talking to JJ on that question. Let's just pull it off. All right. Airbnb. So Airbnb has become a little bit of a problem. And what is happening is the federal government right now, they're considering enacting measures that would encourage cities to limit the supply of Airbnbs. And this is part of its effort to increase the availability of long-term rentals across the country. So here's the issue. And I've got more to say on it, but the big issue right now is that landlords who have long-term units they're not making as much as landlords who have the short-term units. So a lot of long-term unit holders are trying to get their properties listed as short-term. So they're trying to move into that B&B market because they can increase rents faster. They don't have to deal with a lot of legislation. So anytime in between tenants, they can raise those rents up nice and high. And this is the problem, right? Because right now we have a shortage of housing. And if we start removing some of these, long-term units off the market to turn into these short-term units, that creates more of a problem. So the legislation that the government is actually talking about, it's going to apply to all short-term rentals. So it's not just Airbnb. And the idea is to have the municipalities change their city's bylaws to reduce the overall number of short-term rentals allowed to be operating in the city. New York City down in the States, they've really clamped down on it. I think now you're not even allowed to set up any new ones in that city. So that's pretty big. There is also additional talk about boosting the taxes on the short-term rental income. So if you're doing short-term, you're going to pay the tax man more. That's an incentive to not do short-term. So that is definitely something that we're looking at. Now let's take a look here. JJ says, will you make a deep dive video going into the new bond covered call ETFs from Harvest, Horizon, and Hamilton? Do you think that could be a good short-term or long-term hold? Okay, so I know that Hamilton has this new ETF on bonds, and maybe what I can do is I can probably do I don't know if I'd call it a full deep dive, but I could certainly do a video on bond ETFs and bring in those ones right now. Now, I won't have that done like immediately because I sort of plan my videos out into the future. But if you are looking for a sort of a deep dive on at least the Horizon one, I believe Mark Beavis over on the Brandon Beavis channel, he actually did one. I think it was maybe a week or a week and a half ago, and it's a pretty good one. So you can sort of use that to at least get a little bit of a head start before I get around to getting this one done for you. But yeah, I will definitely look at this. I think this is a good topic, and it's a topic I've already been thinking about doing. So we're going to definitely do that. Now, Skit says, let people do with their own properties. So yeah, I mean, I can understand that. It's one of these things that when you let the government sort of overwrite what a person can do, but at the same time, you can't let, if all the landlords decided all at once, we're only going to do Airbnbs and short terms, that makes it really hard for a lot of the people out there. So I can understand both sides of this equation. I always hate government legislating what you have to do with your own property or, you know, in that case. But I understand where they're coming from in trying to. Now, really, what they should be doing is we shouldn't even be in this situation to begin with. As you're increasing like immigration, for example, and you're bringing in all kinds of people, like lots of people, what they should be doing is they should have realized, okay, well, we don't have the housing for all of these people, so either A, slow down immigration a bit, or B, dump as much as you can into getting new houses built. Start removing all of the red tape so people can build houses faster. That's the way you sort of get around stuff like this. So I I hate to see us in that situation, but we are in that situation. Because here's a funny thing. When you look at Canada overall economically, so, even though they say, okay, so our GDP is, it's creeping ahead a little bit. We're up like a fraction of a percent. But here's the thing, because of all of the people coming in, when you actually look at the GDP per person, it's actually going down. It's actually in the negative. Now they unfortunately they use they use the GDP itself opposed to GDP per capita for determination of whether or not we're in a recession. But when you look at that and you look at the level of let's say, for example, unemployment, that how much it has increased, a lot of these numbers out there are actually recession numbers. So in a sense, it's almost like we're in a recession right now, even though it hasn't been called officially, and I doubt it'll get called efficiently for officially for a little while, probably not until 2024, if they even call it. They may just sort of keep up that mirage that we've got the soft landing and go with that. So it's hard to say. It's hard to say how it's all going to look out, but there's a lot of signs in the economy saying that, hey, things are getting rough. I've seen so many signs that, if you're an investor, you want to pay attention to some of these things because, if we have another major correction, even if it's whether it goes into a recession or not, if we have another major correction, that's going to be an opportunity to get some things, some of your long-term investments at a nice discounted price. So it's not a bad idea to really pay attention to what's happening right now. Now we got Jordan in the house saying hello, everyone. I think I got that right. Lisa says, I agree with Skits. Maybe the government should put a hold on all of this immigration and they wouldn't have to create this sort of legislation that restricts property owners. Yeah, exactly. So, I mean, in a sense, the current government is using the increase in immigration to put this Band-Aid over things so that they can parade it out and say, hey, look, our economy is not so bad. Our GDP is in the positive. But yeah, you have to kind of look at the whole big picture. And sometimes governments will pick and choose the stats that fit the narrative that they're trying to weave. Lisa also says, in some cities, you can't even get a hotel room because they are full of immigrants. Maybe I don't know about. I haven't actually run into any information on that, but that could be a situation. And Skit says, right on the nose, GDP per capita is actually down. Yeah, it is. Absolutely. And Skits apparently has a solution to a problem we created. So, yeah, I mean, it's one of these things going into the pandemic. The government took extraordinary measures just sort of, and I understand them. I'm not saying they shouldn't have, but the thing is, you got to know that there's going to be consequences. To me, I find it almost, I don't want to say negligent, but I'll use that word for this moment, for a government and the Bank of Canada to say, "Oh, don't worry about it. Rates are going to be low for a long time." And then we get in a situation where rates are not low, where we don't have, for one, they first of all they said, "Oh, inflation's transitory. We're going to keep the rates low for a long time." So, it's one of these things where if you use a lot of common sense and common economic, just simple economic information and education, you kind of get the idea that it's not going to be that way. I even my mom was like, "We're my mom," and my mom has not even a lick of economic education. I mean, she was saying at the beginning of the pandemic, is like after all of the supports and stuff were coming out, she's like, "Oh, we're probably in trouble for a decade. We're going to be paying for this for a long, long time." And it's true. It's just the way things happen. It's nobody's, I mean, the pandemic is nobody's fault, unless you believe some conspiracy theories, and maybe it is somebody's fault. I don't know. I don't care. But we have to sort of look at the fact that, um, you know, we have to pay for everything that was done in that pandemic. And we can argue, like, maybe the liberals, for example, didn't, maybe they were a little bit too free with the supports. Maybe the conservatives wouldn't have been as free with the supports. Who knows? It's hard to say unless you're in that situation. Um, I mean, no matter what government I think was in at that point, we still would have been having some economic issues from that. But now it's dealing with the issues after the fact. And right now, I don't feel like we're doing we're not doing the right things. Um, there's a few things every so often the government does something. For example, cutting the GST on new construction projects. Yeah, that's great. We want to encourage new construction projects. We want to get more housing going, but this whole big fund they have to build houses, not a lot of people are taking advantage of it. So that should be something that people should have been able to get in on immediately. Now, there's more issues. Like, this is a kind of a tangled web of issues. I mean, you can say, well, okay, there's labor issues, there's supply chain issues. It's all sort of coming together. But, it's just one of those things that we have to sort of look at. And I think, there's going to be some issues with the economy for a while. Now, I know a lot of people, especially in the investing world, I've seen a lot of people like this year get excited going, "Oh my God, it's over. Look, everything's going green again. We're heading back into a bull market." And I'm just like, let's not quite call it that yet. And I think now people are starting to see after September, especially after September, I think people are starting to say, "Oh, okay, maybe we're not going into that bull market. Maybe there's a bit more pain ahead of us." And I think there still is. But here's the thing: once the pain does hit, so let's say a recession hits, that's good, because if we get that recession out of our system, because it is part of the economic cycle, once that recession is out of our system, normally in the middle of a recession, that's when a bull market starts, and that powers us out of the recession back up. So I think that's going to be kind of a good thing in many ways, because I said this, and I think I said this last week. I think if we go into a bull market without a recession, I don't think it'll be as strong of a bull market if we go into one after a recession. I think that would be a lot healthier for a very good, strong, long-term bull market. So let's hope. Now, Trevor's in the house saying hello, all. And then Lisa's like, "I live near Windsor, where they are building the new bridge to Detroit. They are having a hard time finding rooms for tradespeople coming in from out of town to work on it." Yikes. Yeah, that's not good. That is not good. Well, there was a story, and it was out of Halifax, actually. It was a senior citizen who lived in a senior citizen building, and some of the seniors in the building were really, really noisy, and he had had enough with it. So he gave his notice and he moved out. He didn't realize how bad things were, and he couldn't find another place. He ended up living downtown Halifax in a place called Parade Square in a tent. Now, his situation was he had bad knees. He was supposed to get surgery on them. Surgery had to get postponed because Well, you have to have a residence to live in to be able to get a surgery of that sort because there is, recuperation involved. Now, luckily for him, the news caught on to his story and it made it into the news. And after that story hit, some guy who had a room actually approached him and said, "Hey, I got a room. Let's work something out." So now he's no longer living in a tent and he's going to be able to get his knee surgery. But the problem is, that's a happy story. There's probably 20 not so happy stories for every happy story. So you kind of have to sort of take it with a grain of salt, I guess. All right, now let's see here. And Skip says the whole world adopted the same solution. Money printing seems fishy. Um, I think the world, here's the funny thing. Before the pandemic, they did this massive, and this was a massive pandemic simulation that a whole bunch of countries took part in. They invested a lot of money in it so that they could figure out how to actually handle a pandemic when it happens. And all the lessons they learned in that scenario, because they ran into all the stuff we ran into, everything from not closing airports fast enough to supports everything. It all came up in this big study, and then the real thing happened. And here's the funny thing. After we did this big study, you'd think we would try to learn from some of the mistakes made in that study and not follow into the same traps. But we fell pretty much into every single trap and we made every single mistake. So I was just like, I can't believe it. But it happens. So, what can you say? Abalash says, I feel Trudeau will lose the election. People are angry about housing crisis, groceries, pretending that they are getting lower prices, and conflicts with other countries affecting free trade. Yeah, I don't think I think the chances of Trudeau somehow winning the next election are as close to zero as you can get. So I don't think he has a chance. Now, the Liberals, if they want to be the official opposition, I think they need to distance themselves from Trudeau before that election. So Trudeau would need to step down, and then they could pick a new leader. I also think that if you look at, like, I know that he's been kind of grooming Chrystia Freeland, and I almost think that she might be too close to him to be the one to step into that role. But whatever happens, I think they need to. But I don't think they can win the election. I think now we're at a situation where if the Conservatives don't have any kind of scandals or make any big mistakes, they're probably going to get a majority. If they make a few mistakes, maybe have a few scandals before that election, then they're probably looking at probably a strong minority. So we'll have to sort of see how that all works out. How much more do you think the market needs to fall before the bull market? TSX at 15,000. Some stocks like Northwest Health and Algonquin already fell 50 to 60% from the peak. The amount of pain that we have left, I don't think it's going to be. If you look at last October is when we hit the bottom. I don't see us going much below that. If it might even be a situation where, imagine this, where we go down to about the same level, but we could go a little lower. I don't think it's going to be another 50, 60%. I don't think it's going to be a huge one, but I think it's going to be one of these situations that when we fall in, it's going to be like a slow red market type fall, unless we have some kind of a black swan event. And with this world right now, it seems like every day you turn on the radio, you turn on the news, there's potential black swans all over the place. But let's hope that things stable out. We get a little bit of stability before then. So yeah, things like Northwest Health and Algonquin, if they fall much further, it's going to be something like maybe 10-20%. But I don't think you're going to see it go insanely low. It's not going to be a situation where, now, let me just be clear. When you start to look at like penny stocks, you probably will run into a situation where some of them are going to just not make it. So you want to be careful if you're looking at, but if you're looking at the much bigger companies, you're probably going to be fine. Like Northwest Health will be fine. Algonquin will be fine long term, but there is definitely more pain. Wayne says, According to Peter Lynch, in 4 years, the Social Security budget will exceed the defense budget. Default will follow. Current deficit 13 trillion and growing. Yeah, we're in a situation where a lot of countries have such a huge aging aging population that we're getting to that point that uh, supports for seniors, for example, are going to be absolutely huge. Now, in Canada, we don't have. I think our defense budget isn't super big, so it'll be easy for us to exceed it. But I could even see that happening in the U.S. and a lot of other countries. Now, there are some countries um, that are going to be very interesting to watch as we move into this. For example, Japan. Japan doesn't have a lot of immigration, and they also have a pretty old population. So it'll be very interesting to see how this is all going to work out. So it's going to be a point that we're going to have to. I don't know if it's just that the world needs to start to make a little bit more peace with each other, but we're getting to that point where we're going to run out of younger soldiers because it's that's just the way the world is going as we move more and more. Um, Now, here's the other thing too. I mean, healthcare is going to, even though investing in healthcare, I think is a pretty safe bet because there's going to be a huge demand for it. But there's also going to be some of the healthcare shortages we're starting to see already are going to get aspirated as more and more people move up into that age. Because right now you've got the baby boomers; most of them are at that retirement type level. But now the Gen X's are starting to move into that direction too. So you're going to soon have the Gen X's moving in right after the baby boomers. There's going to be a lot of people up there. So yeah, I think I think Peter Lynch might be on to something here. All right. Um, all right. Let's see here. What story were we on? We were on the Airbnb one. Let's move to some spending cuts. So this one's kind of a clickbaity type title. So what we're talking about is a RBC report just came out about people's spending habits in September. And what they have seen through their customers and through their credit cards and things is that restaurant spending has declined, auto sales have declined, nominal spending has also declined, and discretionary services have really declined. But there was actually one area where the spending increased, and that was with essential items. That went up about 10%. So, we're starting to see all these rate hikes are starting to come together, and we're actually starting to see people stop spending. And I don't want to say that that's good. I hate that people, have to sort of sacrifice a lot of stuff, but it should make the Bank of Canada happy, hopefully. Because we do have, I think it's on the 25th, I think, is our next rate hike decision in Canada. And I'd very much like to see that remain in a pause. But before that does come out, we still have another CPI and a PPI. And we got a bit more jobs data that's going to drop. So I think that will really help. I think in this case, watch the CPI coming out next week. I think that will be one of the huge factors when it comes to what that Bank of Canada is going to do with this next rate hike. All right. Oh, we're slowly getting there. All right. Is Google right? So right now, there's a news media lobby group. They've come out and they've said that Google's concerns over the Online News Act are valid. So as you know, the Online News Act, that's the one that's out there that's why you can't see any news on Facebook. So that's kind of interesting. So News Media Canada, now they represent hundreds of publications. They actually agree with Google that there should be a cap on how much it would have to pay under this new law, and that the compensation shouldn't go beyond direct payments to also include things like training, and there also need to be incentives to make Google and publishers come together to reach deals. And that's what Google said, because Google is the one that said, like Facebook just said, no, we're not even going to negotiate. Google's trying to negotiate with the government because they don't want to have to pull the news off of Facebook, off of Instagram, and out of Google searches. I know that'll make my life really hard for this show. I won't be able to do any Google searches if I run out of news articles. I'll have to expand my I'll have to expand the news sites that I go to for sure. And before that happens, there was also some concerns raised as well about the formula for determining how much it needs to contribute. So the government says, oh yeah, you should have to contribute 172 million per year. And Google's saying, well, you know what? We actually did all the math and it comes out to 100 million. And the news media lobby group said, yeah, it's closer to 100 million. But the feds are standing firm at 172 at this point. But hopefully they back down a little bit, because and this is a neat little thing here. If you on Facebook, if any of you guys are on Facebook and you want to share a news article, find a YouTube version of that news article. So if you can find a clip or something from the news, you can share that because it's on YouTube. So that's one way to work your way around that ban. So just to give you a little bit of a heads up on that. All right. And finally, we got the crypto rounds. Here's the funny thing. The crypto rounds this time around, we did have a lot of crypto stuff this week. We did have Forbes did come out with a prediction saying that if the U.S. goes into an economic downturn, and we kind of been thinking that this is what's going to happen, it could boost some cryptocurrencies. And they're saying everything from, well, they're basically saying 3 coins will probably go up if this happens. So we're talking about Bitcoin, Ethereum, and good old Ripple. And, Ripple has a good chance of coming up. All right. And I'm just going to very quickly knock out that next week, and then I'll get back to your comments here in a second. So next week in Canada, we've got on Tuesday, we got the CPI coming out. On Thursday, we got the PPI. And then on Friday, we get some sales data. The U.S., not a lot, but there is there's a good amount of jobs data coming out on Thursday. When it comes to earnings in Canada, we got two big ones. Mullen Group, so MTL, they're coming out with their earnings. Now, they have been trending downwards in the last quarter, so I'm not expecting much from that. We also have, if you like those royalty stocks, AW.UN, so A&W's royalty, and that was also been downtrending as well. So once again, another earnings report I'm not expecting a lot from. So, all right, let's see here. Where were we at here with the we're right here. So JJ says, how likely will the feds raise the interest rate again at the next decision? So for the US, that's November 1st. I'm thinking they're going to do it. I'm kind of leaning in that direction. So I think there's a better than 50% chance we'll see another 25 basis points. Canada, that one is on the 25th of this month. And Skits is saying 25 basis point increase, guaranteed there. I think it's really going to come down to that CPI. So when next week we'll have a good idea on what's going to happen. So right now I'm still 50-50 on that one. So the US, I'm saying yes. Canada, I'm saying 50-50. So let's see here. Skit says both Canadian bills, C11 and C18. So C18 is that news one we were just talking about. Should be completely repealed. I hope not. U.S. company negotiates. Yeah, I don't like either of those bills. So the news one or the C11 one is that whole YouTube one. Well, it's not just a YouTube. It's all social media. I don't like either of them. I don't like the Well, with the C11, I hate giving more powers to the CRTC. I know that they mean well. Well, they're supposed to mean well, but C11, we haven't even seen anything happen yet from C11 because they said it'll take them about a year to institute whatever plan they plan to have happen. So we'll have to see how that's going to look. But C18, this we've already been affected. If you're on Facebook or Instagram right now, you're not getting any news. Google's up next. So yeah, that's that whole thing with negotiation, right? If they do negotiate, then then we may not get a repeal. But the Conservative Party has said they will repeal both of these if elected, and if that's part of their platform, I think in this case here, normally when you're coming in and you make a lot of promises, and this is your first shot at the title, you normally keep a lot more promises than you would. if you're being reelected. So that's kind of the thing to keep in mind. Now, Lisa says, how would this affect YouTube since it's owned by Google, if at all? It will affect you. Well, the news one, how that will affect YouTube is we may not be able to view Canadian news. So, for example, if when you go to your news feed, scrolling down through YouTube right now, you can see like things like the National and other Canadian news type things. So that may be affected. Now, we'll have to see how this works out. I think Google will work and will bend as best they can to try to prevent it from happening. But we'll have to see how that is going to work out. Now, the other one, potentially, so C11, what that means is that when you go to your YouTube feed, you potentially, and we have to see how it works, but potentially you could end up seeing more Canadian stuff, that they'll start pushing more Canadian stuff into your feed than you would normally get. Now, some people are saying, oh, well, that should benefit you because you are a Canadian channel and everything is, true blue Canadian. And, you got everything up on the screen, but the maple leaf and the syrup. But it's one of those things. It's like they could come. We don't even know how they're going to handle it. Now, the government says, people like me, you don't have to worry about it. But they also have said things like if you're making money, then you might need to be registered. So it's really hard to tell. I don't want to even guess how this is going to look until I see the actual, what the CRTC is going to lay down on us. But yeah, I still don't like either of those bills because personally, when I go to my feed, I love Canadian content, so I have no problem with that. But I don't want it to be shoveled to me, especially if they start doing language stuff too. And all of a sudden I get, I don't watch French videos because I don't understand French enough to watch a French video. But I don't want to like have half of my feed in French videos because that's just a waste of space. And it's not fair to those people, right? So let's say, for example, if they force Canadian content into a feed, so anybody who's French, if they were to put a French finance channel into my feed, even though I watch finance and I would love to support them, I'm not going to click on them. So that's going to actually be, it's going to count against them when it comes to, oh, look, the video is not going to get clicked on as much, so we're not going to share it as much. That's the way the algorithm works. So I'm hoping it doesn't do stuff like that. Like I'm hoping at least it will look and say, okay, does this user watch French videos? If the answer is no, then only, push English Canadian stuff content at me. If I were to start watching French videos, then sure, you know what? Yeah, throw both at me. But I just kind of want to make sure. And the same thing goes if somebody doesn't speak English, because there are people in Quebec that, they're not very good with English. But French, is where they're at. Well, they shouldn't be forced to get a whole bunch of English videos in their feed as well. So I just want to make sure you realize that goes both directions. Larry says, I'm late as usual, but my Tesla puts are printing. Nice. Good old Larry is our, he does a lot of options, folks. So he might be, if you're trying to learn about options, he might be someone to say hi to. Enid says, hello, everyone. I'm late again. Look at this. You guys both are late and you both came in at the same time. Not trying to start a conspiracy here, but And here comes 9. Banana bread. Yeah, gotta love the banana bread. Let's see. King of Day came in late, but I made it. How is everyone doing? Happy Sunday. Wow, that's like a whole gaggle of people that came in late. That's hilarious. Let's see. Skit says, I don't need my internet content curated, just another step closer to censorship. Yeah, it's like, I want to watch what I want to watch type thing. And, like, for example, if you're living in Canada and let's say you're American born, maybe you love that American content because it makes you feel like you're at home. You don't want that being replaced by, some Canadian stuff. And last week I was having a problem with Sterling Silver. I had to call him Silver Surfer because I don't know why. I just couldn't get it right. But hey, he's in the house. Wow, I had to sit through all those ads before they let me into the program. Hope I'm still in time for the closing credits. Yeah, absolutely, absolutely. We still got some time left, Sterling. So you are good. Let's see here. Candace, have you completely left day trading? Not entirely. I mean, I mostly do swing trading, but if I see an opportunity, a day trade opportunity that's pretty obvious as I'm looking for some of my swing trading stuff, I grab the occasional day trade, jump in, get out. But they're usually I know what the market's going to do. I tend to try to be a little bit less risky with the day trades. All right. Sammer says, hello, all good afternoon. Expiry January 2024. What's expiring January 2024? I'm not sure. Oh, your puts. There we go. So puts at 200. All right. Not too bad. Not too shabby. All right. Guys, throw more questions in there. We'll talk about this, that, and everything. Friday, I actually went to Toronto. So Friday morning, got up pretty darn early, like 4 a.m. Got ready. Me and Jill jumped on a plane and we flew to Toronto. So Jill had an appointment, and where she's blind, I wanted to, help her get to her appointment and navigate Toronto because she's not as familiar with Toronto as I am. So we did that, and then we left there, and I wanted to go to the TSX. So we did go to the TSX, but I was actually very underwhelmed because you can't go in at all. Like they said, yeah, well, there used to be public tours, but they don't do that anymore. And I'm like, no, I mean, we actually walked for about 40 minutes to get to the TSX from the hospital, and then we couldn't actually go in. I took a couple pictures of the sign, but other than that, I mean, the sign was cool. I was just sitting outside of the TSX watching stuff, whether it went up or down. I actually, on the Facebook group, I put in a picture of the ticker because I got to see that Dollarama went up. So I was like, okay, guess what's up? So that's where that came from. For those of you who saw that, yeah. So after that, gosh, we, had some really good pierogies, and then we took the train back because I thought it would be. It's funny when we were planning this trip. I was like, okay, let's take the train back because then I can see some of the see a lot of the trees and the colors and everything. But of course, because of the fact that this year was warmer than normal, no colors. Basically, we went from green leaves to brown leaves. So it was like, very underwhelming. But I will absolutely look at the next time I do it, probably fly both ways, because the train ride was a good 4 hours. It was actually about 5.5 hours, to be honest. Yeah, it was 5.5 hours of just sitting there, looking at brown trees and then darkness. So anyway, other than that, though, I still like the train, though. Sammer says, Candace, how those bond ETFs like HPYT works in terms of taxation, especially on a margin account. That's a good question. I don't know. At least on margin. Now, it really boils down to, I mean, it's going to really still boil down to what you're making, right? Because if you're, I assume you're doing this in a personal account, so it's all still going to be, well, here's the question, though. If you're playing with these bond ETFs and you're actually cashing them in and out, then you are looking at capital gains, or no, it may not be capital gains if you're doing it a lot. If you're playing this like a lot and it looks like business activity, it could also be business income, or business losses, depending on which way it goes. So I would need a little bit more detail to really sort of boil down to exactly how the tax is going to work. All the margin is going to do is when you cash out, you're either going to have more money than you normally would or less money. So it's going to make that capital gain or business gain or business income. It's going to make it bigger, and it's still going to work out tax wise. It's still going to be the same at the end of the day. All right. JJ says, would you ever do your own Canadian fund manager interviews and dedicate most of the time to asking all the very technical questions? Yes, I would love to actually interview some of the Canadian fund managers. It is something that is on my horizon, and I think I've been waiting for myself to get a little bit bigger so that they'll actually answer my questions. So, but yeah, definitely something that I do want to do. I would actually, funny enough, the I would love to actually interview the fund manager for Canoe. Start there, and then maybe Hamilton and talk to Horizon. I think that would be a lot of fun, and it's definitely something that is on the agenda. And we are starting to grow, and we are getting close to, I think, that level where they'll actually listen to us, which would be fantastic, right? No trading floor. I know. I couldn't even go in and buy like a TSX T-shirt. I would have. I really would have. I would have been wearing it right now if I had. Let's see. I'm thinking chips should be bad with ASML and TSMC reporting this week, based on their last earnings, and most importantly, what Shin ETSU said. Yeah, I think right now we're at that point. Like when you're talking about chips, I think we're at that point where we had the big part of the AI boom, and I think we're going to be in a lull, an AI lull, until some of the next stuff hits. And be very aware. We're going to have, like, when Chat GPT 5 comes out and starts doing some really silly stuff, that's going to cause another bit of a boom, and we're going to see some of that stuff come back up. So I think chips are in a lull, but that lull just might be an opportunity for you to get in and get ready to ride the next little boom, because I think it will come. I'm pretty sure of it. But do your own due diligence. Don't just say, oh, Candace said jump in. Don't go and sell your house and buy all chips. Unless you do your due diligence says, yeah, I'm going to sell my house. I would not do that, because I think that would be a little bit crazy. So we'll have to see how that goes. King of Day. Candace, how long and how did you get into investing and trading? Thanks. I actually had that question. I think it was in a comment earlier. So I'll give you my history right now. We'll go all over it. We'll do it once again. So interestingly enough, in school, I knew absolutely nothing about investing. I went to university. I did a double major, biology and chemistry. Went and worked in a lab for a while, found out how boring it was. After that, I decided to I wanted to move into management and get management experience. So I started doing some of that. So I've managed things like Superstore, um, an art gallery as well at one point. Now, one of the things, exposures I did get to, and this was mostly through Superstores, I had to do all my own accounting, which was really great. So I got to really start playing with numbers, balancing, doing a lot of balancing. And I found that very, very interesting. From there, at that point, I moved into training. That's one of the reasons I'm really good at. I could pick up something brand new tomorrow, and I could be competent enough to train it the next day. It's kind of the way my mind works. I'm very good at absorbing information. So I started getting a little bit into investing and learning a little bit about it initially. And then once we moved into the pandemic, I was like, okay, let's really, really learn a lot. And that's what I did. I did crash courses. I read an insane amount, absorbed a lot. And then I decided, okay, well, you know what? This is something I would actually kind of enjoy doing. I would enjoy being able to pass this information on. That's how this channel came about a couple of years ago, and it's been going strong. Do I know everything? No. Like, I'm pretty weak on options. I know the basics, for example. Larry right now could circle me, completely run circles around me when it comes to options. But once I do focus on options, I'll learn a lot of that very, very fast. And that's kind of the way I approach things. Anyway, but I think my biggest strengths, at least YouTube wise, is that, I'm kind of a bit of a personality, and I'm pretty easy to listen to, easy to understand. And I think that really sort of helps things along the way. All right, let's go see here. Where was I at? Oh, I kind of missed this one. JJ said it was because it was too Sammer, mostly capital gains plus ROC. All right, let's see here. We got that one. This one. Can you claim capital losses to reduce taxes if you are not claiming you're trading as a business? Not yes and no. So if you have, for example, if you have capital losses, You can only claim them against capital gains. So that's kind of one of those things. If you only have capital losses, it's not really going to help you tax wise, but they carry forward. So let's say this year you have capital losses, but next year, let's say next year we move into a bull market and you have some insanely great capital gains, you can use the capital losses from this year to help you pay less taxes the following year. Now, keep in mind, with capital losses, though, as long as it's a capital gain, it doesn't have to be a capital gain on stock. It can be a capital gain on crypto, for example, and you can still balance that out. Or, so as long as it's a capital gain versus loss, you can balance those. Wayne says, Larry, good choice. I usually close at 30%. Let's say Toyota announced their global battery standard this week using sulfide, so sulfur. Now that's very interesting. And that is one of those things that I sort of always say, that when you're thinking about things like lithium, if UV batteries move away from lithium and start using other components, you want to be paying attention to that, because you don't want to get stuck in lithium and all of a sudden have it go down and not be able to get an exit strategy. And if you know of something coming along, so for example, like this here with sulfur, you might want to look at sulfur. Maybe there's an entry point. Maybe there's something that you can use as an opportunity there. All right. And those are some averages. Oh, and Wayne was at the TSX last year. Yeah, exactly. Glad to see I'm not the only person who was disappointed. So that's kind of good. Sammer says, thanks, JJ, because it is bond plus covered call on it. All right. Jizzy says, if GDP to SEP ratio is real, should stock market crash my 40% to have a fair buy deal? We had a bull run in the last 10 years already. Yeah, we had, most of the pandemic was actually a bit of a bull run. And that's really interesting. A lot of people came in the pandemic while we were still in a bull market, and they did a lot of buying. So there's a lot of people right now that are still in the red who bought at like some of these crazy all-time highs. I remember I think it was in 2021. I remember almost every day they're like, yeah, S&P 500, new all-time high. S&P 500 next day, new all-time high. So it was definitely happening that way. I want to jump to Larry, but let me just see here. So I don't know about 40%, but everything is possible, but at the same time, I don't think it'll be that bad. But I could be wrong, and I'm willing to say absolutely. I say always watch, pay attention to what's happening, because anytime I make a prediction on what I think is going to happen, it's based on the information I have up to this point. Tomorrow, there could be a black swan event that could completely change everything. Things change pretty fast in the market. That's one of the things that everybody will tell you. Nobody has that crystal ball. We can only look at probabilities. And even if it's a probability, an 80% probability that something's going to happen, you always have to remember there's a 20% probability that something different is going to happen. And sometimes the 20% wins over the 80%. It's just the way the market goes. And that's kind of when you're doing swing trading or day trading, you're playing probabilities. You're thinking, okay, well, especially if you start using technical analysis. If you start using technical analysis and you sort of look at some patterns, so whether it be a flag or a head and shoulders or something like that, you're being, okay, well, look, there's an 80% chance it's going to break in this direction, but sometimes it will do that opposite. It will break in the down direction when you're thinking it's going to go up. I've seen this so many times, especially in crypto, because where it's a little bit new and a lot more volatile. Sometimes your TA can really throw you for a loop. Interview me. Yeah, if you're serious about that, Larry, if you want to come on camera and you want me to interview you, that's a possibility. Just reach out to me. Use the email link on my profile page on YouTube. Let me know, and we'll talk. See, Jay says I bought CWB, so Canadian Western Bank, Bank of Nova Scotia, Manulife Financial, and of course XEI ETF. Okay, yeah, Canadian Western Bank. It's really interesting. They're a bank. I think I like them long term a lot. So I did sell out of them before some of the banking crisis, but only because I kind of saw the banking crisis coming. So I sold out of a few things. That was one of them. But it is something I do want to get back into. Probably when I think we're in that little bit of a lull before it looks like we're going to get some serious recovery. So I'll definitely be looking at. I think the prices are really good right now for all bank stocks. So just want to keep that in mind. Larry says my fund is small, but it's ever growing, using a corporation for long-term people and a limited partnership for short-term oriented people. Yeah, absolutely. Yeah, there's a lot of things you can do tax-wise, creating businesses, things like that. You can really utilize to minimize some of the overall tax situation that you're in. Let's see. Larry says 150 in my corp and 480 in my limited partnership. Small potatoes. Let's see here. JJ says, Candace, I have the same educational background as you right now, stuck working in a cancer research lab. Might switch to something else more fun, like swing trading on the side. Yeah, absolutely. And the lab I worked in, I tested water. The most fun I had is once a week, I would go to a solid waste site, and they had wells all over all throughout the site. And I used to sort of hike all through the site to get leachate samples. So use a little, basically dropping this collector down a long tube, bring back the water. I would set up a whole bunch of tests, for example, suspended solids, biological oxygen demand, things like that. I would take a few readings through the week, and then on Friday, I would write up my final reports, clean everything, and be ready to start again on Monday. It was pretty much other than collecting the samples, it was a very boring job. So, and that was before a lot of internet access happened at work. So I did not have the internet in my lab. So I used to sit there and read a book or something like that. So yeah, that was never. It was boring. It was very boring. Jizzy says, how much does intrinsic value matter? USA top stocks are overvalued as compared to Canadian. Is no one paying attention to Canadian stocks if intrinsic value is real? So when you're looking at like real value, so fair value of a stock, you have to look at it in terms of the big picture. So if something is saying it's undervalued or overvalued, you want to look at the other fundamentals, first of all, to take a look and see what's happening. So for example, if you have a company that is expanding like crazy, they very well could, their fair value may look absolutely undervalued, but it's not accurate, because you have to look at that whole situation that's happening. So you have to take it with a grain of salt. It's kind of like when you are looking at a stock, you want to take a full fundamental snapshot of it. You don't want to ever rely on any one thing. So for example, if you're looking at just the intrinsic value of the stock and only buying if it's if it's undervalued, that's a mistake. So you want to be always taking a larger picture and looking at everything and sort of seeing how things are related. And sometimes as well, even then, sometimes you can have a fantastic, huge picture, but things can still go absolutely wrong. Give you a good example, Northwest Health. Fundamentally, they weren't that bad the last time I did them, but there was a chance they could have cut their dividend, but I didn't think they were going to, but they decided to. Quite literally. It's like I dropped that video and they cut their dividend almost a couple weeks later, and I was just like, oh, great. Because I even said in the video, I think I said that, cutting their dividend would make sense, but I don't think they were going to do it. But I guess in this case, they went with what was going to make sense. Larry says, I lost 12K learning how to get good at options. Yeah, absolutely. When you're talking about options, or if you're talking about day trading, be prepared to lose money in the learning curve, because that's how it happens. Secretary of the Treasury, Larry Summers. There you go. That's awesome. Candace, that's why Larry Summers is the U.S. Secretary of the Treasury. Vic sneaks in towards the end as usual. Hey, Vic, glad to see you got home. Oh, and here's Richard, Montreal. Hello, Richard. Good to see you. Here's V, dollar cost average, and try not to time the market. That is what I try to do. And you know what? If you're long-term investing, dollar cost averaging is the way to go because, when you try to time the market, it's not very successful. But dollar cost averaging, you're putting, buys at a regular interval over an average, and you're going to hit it. You're going to hit the market when it's high. You're going to hit it when it's in the middle. You're going to hit it when it's low. But that average is going to be a fair price for that asset. And then, of course, that asset, of course, will go up over time. So, yeah, you're doing the right thing. JJ says, Sammer plus some interest income. All right. Let's get back down here to Vic, see what Vic has to say. I've heard that most with portfolio over 1 million have 30% in cash with 4 plus percent. Face turquoise covering eyes. It depends. It really depends on I've heard of some people who are like, I got nothing in cash. It's not even that they have nothing in cash. It's that they may have it in something that they can liquidate really, really fast. So probably something fixed income of some sort. So for example, right now, like if you wanted to preserve cash, but you wanted to make you a little bit of money, you could always use a cash ETF. So something like cash, so CASH, as a way to be able to pull it out liquid fairly quickly without having to worry about all of the downward and upward trends in the market, because it's pretty much it's designed to maintain its value. Jizzy says, yes, but there's a big price you pay by buying overvalued market like in 2000 and 2021. Exactly. If people sort of realize, like if you realize that you're coming to the end of a bull market, there can be a huge price that you're paying when you're buying something that's so overflated. Take Bitcoin. Look at Bitcoin at its all-time high. 60 some odd thousand. People who bought in at that point, they're gonna be in the red for a very long time. So be a little bit careful about that. All right, Candace, any thoughts on Molly Hill's CBank? 100% upside on Canadian banks, equal weighted and 25% covered calls on margin. Yeah, there are definitely some bank stocks like that. Now with CBank, I tend to stay away from the margin myself because like I said, I'm that total return investor. But I will put the content out there for you guys. Like I don't mind putting it out there, giving you my opinion on some of these cover call. And I do jump into cover call stuff, but the majority of my portfolio is always going to be that total return stock. So that's what I'm looking for. That's kind of my bread and butter underneath everything for the long term. But yeah, I like that. And there's also I've been in BK for a while as well. Now that's a split share, split core. And it's also covering the banks, but this could be a good one, especially once we get past some of the mortgage crisis that's coming with basically all of the people who have those really nice rates in the pandemic, all of a sudden having to come up to, whether they're going to go with another fixed or whether they're going to switch over to variable. Once that all hits the fan, I think that's going to be a good buy-in point. And even on something like this, you're going to probably get a good return. And these are probably going to grow once the banks are ready to start recovering. And the banks will recover. So, and for the ones now with yields, like I've been stocking up a little bit on Bank of Nova Scotia just for that yield. So, Abalash says CWB was $23 at one time, but is now $28. Yeah. I love Canadian Western Bank. I think it's a good bank. So, Vic says, I bought TIXT, only one share after Candace's video. Disclaimer, I do not hold over 7K shares in TELUS. Yeah, so TIXT, so that was actually one of you guys I think it was Save Our Planet, had asked for me to do that one, and I put it into the pool, and it got voted up. So, yeah, it was a good one. It's actually funny. I think a lot of people, when they hear TELUS International, they think, oh, it's just the TELUS, over on the other side of the world or something. But they actually offer completely different services. So they're definitely a different company. But I thought that was a good one. I was happy to do that one because it was a little bit off the beaten path for what I normally do. Topicus. I don't have any thoughts on Topicus. Um, yeah, I don't have any thoughts. I'd be basically pulling something out of my butt right now if I tried to say I had any opinion. I haven't really looked, but let me take a look. Let me just take a quick gander at Topicus here. Here we go. All right. So, okay. So, oh, TOI. There we go. Oh, it's on the. All right. So, Topicus here. Just quickly trying to get a thing on seeing how it's doing here. Okay. So yeah, it looks like it's down right now. That's interesting. Let me just take a. It's down right now, but it has actually, when I look at it on the 1 year, this is a stock that's gone from $72 up to 86. But but I mean the down right now. Hello, September, nice red month, and October hasn't been the best either. So, yeah, I think I like it. I think I do like it. It looks really, really interesting. And let's see here. Give me one. Okay, so they do vertical market software and vertical market platforms. Yeah, I would say. Now let me just take one last thing for you. I want to see here. They've got a pretty stable beta. Their PE ratio is pretty high though. But they have their return on equity is 21.63%. So there's enough on them, Mary, that I would look further. So they haven't, like, that's generally what I do with a stock, is I'll look at a couple key little features first, and if they're okay, then I'll go in deeper. And it passes muster on those first basic things that I like to look at. I got no opinion on Topaz, but yeah, we'll pass on that one there, Vic, for the moment, just because I don't have any opinion. I can't look. We're getting into the late period, so I'm looking for easier questions right now. My investing formula, DCA into index funds. That's not a bad investing formula. It's also one of those, and then buy individual stocks on sale. Okay, that works. DCAing into an index fund, if you get the right index funds, you can almost have a pretty much hands-off investing experience. And that's normally what I will say to people in, most cases. Like, hey, if you don't want to do a lot of work on your portfolio, you've got a couple of options. One, go with a robo investor. Like Wealthsimple has a good robo investor. It does pretty good. Or two, if you want a little more hands-on, but you still don't want to do a lot of work, then going with index funds is not a bad thing. And I think a lot of people, like if you go in and you just DCA into an index fund, and if you've got a well-balanced basket of index funds, I think you're going to do probably much better than somebody who, for example, buys a lot of individual stocks, but they're tinkering with them all the time. Because a lot of times when you tinker with things, you end up taking little losses here, little losses there as you're moving things around. And that can all add up. Whereas those index funds, you just sort of sitting there, you're letting them just do their thing. All right. 9 says Warren Buffett holds a lot of cash in short-term T-bills. That does not surprise me. And Buffett always had large cash positions, not new. Also, his cash is like 150 billion. Yeah. I mean, in the case of Warren Buffett, though, you got to look at too. He's one of these people that he does move on an opportunity. If he sees a really good opportunity, he needs a certain level of cash or at least liquidity. And I can understand him having that in that situation. Is cash secured put equal out of the money covered call? Not sure what you're asking. If you're asking about out of the money versus in the money covered calls, but yeah, you'll probably like the video coming out on Tuesday because we're going to look at those max yield ones again, or yield max. I always want to call them max yield, and then I'll look it up. I'll go max yield, and I'll be like, no, it's yield max. But there's a lot of them now. There used to just be a couple, but now there's quite a few. Yes, BK has fallen big time, so I think I'm in the red in that. But I'm not technically in the red because I've gotten a lot of dividends out of that. So I'm definitely, if I add all those dividends in, I'm still definitely in the green. After the crash, I'll buy a GTA condo for 100K. I mean, a parking spot at condo, not con. Oh, at condo, not con. Okay. Yeah, yeah. Well, I don't know if it'll crash down to that amount, Vic, but we'll have to sort of see. Berkshire is highly undervalued, 1.1 trillion in assets, market cap 752 trillion. Berkshire, I think, is one of them investments you can't go wrong with. And people who are like, well, I can't afford Berkshire, it's like more than $100,000. But here's the thing: they also have a B stock, so that's much more affordable. And if you're using Wealthsimple, you can always get them fractionally as well. Let's see, X 8.6 PE. Are you guys going to max your FHSA? That's a good question. That good question about your first home savings account. I think if you've got the money, it makes sense to put that money into it, because what will happen is, even if you don't use it to buy a down payment on a house, and you do max out that FHSA over its lifetime, it's all going to get dumped into your RRSP if you don't use it. But here's the beautiful thing, is that it creates, so this is $40,000. It creates $40,000 of free room that you wouldn't have had in there before. So, if you're a big time investor and you're filling things up, don't ignore that FHSA, because if you qualify for it, then you should use it, because it is a way to boost that RRSP. Or if you are going to buy a house, then there's 40,000. Well, keep in mind, 40,000 is what you can contribute. So over that lifetime, if you made the right choices, it may be worth a lot more than 40,000. So keep that in mind. See, Berkshire is, I think, 17% of my long-term. Not a bad move at all, Larry. Let's see, I put a couple dollars in the managed Wealthsimple account for fun. Well, that's not a bad thing. Not a bad thing at all. And that account, it's going to use everything from fixed income. It's going to do an interesting thing. They're robo-investor, but I do like their robo-investor. Vic says, QQQ, 40% this year. My stock picking did not beat that market index. Yeek. Sterling says, I'm new at all of this, so I've been tinkering. Yeah, and that's what happens when you first start out. Tinker around. Don't be afraid to play. But when you are playing, when you're like, okay, I'm going to try something that I've never done before, just don't put a lot of money into that, right? Just play with smaller amounts when you're at that point that you're learning. Now, when it comes to where you should be putting the bulk of your money, definitely put it in the tried and true things. So, for example, if you are into index funds, you may be looking at some of the Vanguard ones or something like that you can put. Or if you're looking at blue chip investing, there's that as well. So I think that's kind of a good thing. But yeah, absolutely. It can still be a lot of fun. I think investing, it'll lose some of the fun as you get into it, as it becomes just a normal everyday part of your life. Larry says, does Canada have a health savings account you can invest in? I don't know. I've never heard of one. I don't want to say that it doesn't, but I don't think it does, but maybe. See, Vic says, life's not supposed to be fun. Oh, Vic, life could be fun if you make it fun. It's just the way you look at things. Let's see. Phil says, if you max out your TFSA and you expect to be in the lower tax bracket for all your career, isn't it better to invest in a non-registered opposed to the RRSP, in your opinion? Well, here's the thing. Look at it this way. If you have maxed out your TFSA and you plan to use that as a income, so as a tax-free income once you move into retirement, one thing you can do with the RRSP is, let's say you've got the GIS, so the guaranteed income supplement. Well, you can make up to $5,000 in income every year without having any of that pulled back. So if you get $6,000 in additional room in your TFSA every year, there's nothing saying you can't pull $5,000 out of your RRSP, move that into your TFSA. Yes, it does increase your income by $5,000, but if you're in that low of a bracket, it's not going to make that big of a difference. So there's just different things that you can certainly do. But yeah, there are people who say, I would rather not put things into my RRSP because, I don't want to have that income generated. But mind you, you can push that off. You don't have to take anything out of your RRSP until, well, till you're 70. Well, not even technically not 71. It turns into an RRIF at the end of your 71st year. So that would mean basically, 72-ish when you would have to start taking out some money from that. So that's just kind of something to keep in mind. If you're in, it's kind of the whole thing. You have to look at the math of everything when you're putting together that full retirement program or your plan. So just keep that in mind. Sterling was looking at aerospace and defense. Yeah, not bad. Well, Bombardier actually has been a big success story lately. Vic says, I blew a gasket at price of McDonald's value meal at $15, but no problem losing several $100. Oh, hi. My watch started talking to me. Losing several $100 on a bad stock pick. It's hilarious. Yeah, sometimes it's like, oh my God, I do not want to pay an extra dollar for that McChicken. JJ says, I went all in Yield Max plus SVOL for my FHSA this year, YOLO. Yeah, now here's the thing. At least with the Tesla one, so the TSLY, that one has done really well this year. And it's still got a 51% yield. So if that's the one you went into, JJ, you're probably looking pretty good with that. All right. RRSP is good for U.S. dividend stocks. It's excellent for U.S. dividend stocks because it's that one place where you're not going to get any withholding tax. Your TFSA, when it comes to U.S. dividend stocks, you get hit with that 15% withholding tax, and you got no avenue to get it back. It's gone. Now, with a non-registered account, you can apply for the foreign tax credit, so you will get some of that back at tax time. Sterling says, if I max out a TFSA at one institution, can you get another at another institution? Yeah, new to this at all. No. You can get more than one TFSA, but the contribution room is it'll go across all of them. So let's say, for example, just to make the math easy, let's say you have $80,000 in contribution room, and you have one at Wealthsimple, and you got 40,000. You put 40,000 into it. Well, you still have 40,000 left. So you could go over to let's say TD Bank and open one there and put 40,000 in there. But then you got 40,000 here, 40,000 there. That's your 80,000. You've got no more room. So you can have as many as you want, but you have to pay attention to the math. Now, here's that big thing, though. This is the beautiful thing about a TFSA. If you got 40,000 in your Wealthsimple one and you grow it to 50,000, and then you're like, well, I just want to, you pull it all out for whatever reason. Well, that 50,000 you pulled out at the beginning of the year, when the new contribution room comes, you're going to get that whole 50,000 back in contribution room, as well as, let's say they add another 6,500 or so, you'll get that as well. So that's kind of the nice thing about a TFSA, is that you do get back that lost, the room that you've grown, you get it all back, but you have to wait. So normally what I say is, if you're planning on pulling money out of your TFSA, it's better to do it towards the end of the year so you don't have to wait to get it back forever. Whereas if you pulled it out in January, or technically, here's the thing. When you start pulling stuff out, sometimes as well, you don't want to do it right at the end of December. You want to give at least, even though it's 3 days for things to settle, I say give it 5 days so that something doesn't go wrong. Because the last thing you want to do is pull it out at the very end of the month or the end of the year and have it not register. So all of a sudden you've lost all your space and you have to wait an additional year. So you want to sort of be careful with that. That's one of the reasons that when people are tax loss harvesting, most people have it done by about, usually by Christmas, most people have it done because they don't want to run into that situation where something takes longer to settle. JJ says, thoughts on the new QQQY and JEPY and their ODTE option strategy? I haven't looked too much at that, JJ, but I do want to start looking at some of these, especially the US ones. I want to start looking a bit more at these and bring some of these to the channel. Vic says, I won't spend $5 at S-Bucks, but pay $9.95 a trade at RBC invest. All right. Now we're at about an hour and a half, guys. So if you've got final questions, get them in right now, and I will try to get through them. Vic says, I bought 100 of QQQY and JEPY. Yeah. I mean, I think they're fantastic. I think some of these as well. I know the JEPY, I believe, is under the I think the Hamilton one, HYLD, has invested in that one as well. So yeah, I mean, I think they're good. I just don't have I haven't really looked too deeply at them. Vic says, bought the dip when they paid out the dividend. What's QQQY? Now, and this is the thing, I haven't looked too much at QQQY, but I do believe it is a NASDAQ related ETF. But I don't know if there's covered calls on it or what's going on with that. So that I don't know. TSLY, OARK, and NDVY specifically, with about 50% in TSLY. Okay, that makes sense. That makes sense. And some of these we're going to see in the video that comes out on Tuesday. Vic says QQQY equals ODTE in the money, cash secured, put strategy with monthly dividend and hoping for 60% returns. Okay, fair enough. 60% is a really good return if you can get it. 9 says, I spent some of my TFSA dividends on essential items so I can increase my contribution room the following years. That makes sense. That does make sense. Wayne says, ODTE, 0 days to expiry. Ooh, and I think I'm finally caught up here. Vic is mentioning launch September 2023, so let's see if it works. Yeah, that's the thing. There are a lot of these really interesting ETFs that have just launched, so there's no data on them at all. And we're going to see some of those in Tuesday's video. Friday, by the way, I believe it's probably, I think right now the vote is pointing towards Alimentation Couche-Tard, so they will be up on Friday. So yeah, it's going to be a good week. Okay, everybody, we hit an hour and a half. Holy banana bread. See, that's what happens when you guys just throw the questions at me. We just keep going and going and going. All right. Well, until next week, anyway, we will see you guys again. I think it's going to be fun. Just bring this energy back next week and we'll have a blast as well. So until then, take care and we will see you. Well, next week. All right. Bye, everybody.